Hey everybody, welcome back to the channel. I am making a super quick video, no editing, no thumbnail, nothing. I literally just woke up and I saw right away, obviously you look at your stocks and you see what's going on. That Brookfield Real Assets Income Fund, I actually got an alert from Questrade as well that it's down over 10%. I'm like, what the hell is going on? So I figure I check it out, and right now, as I'm filming this on the 30th here at 11:33 Panama time, which is 12:30 Eastern, RA is down 20%, a little over 20%, $3.50. So why is that? Well, if we look at the news, it's basically because they declared their new dividends as of October. They typically declare 3 dividends at a time, and they declared them about 40% lower starting in October. You have the graph here. So the September dividend's not going to change. And by the way, it's been almost 20 cents since the inception of the fund for a really long time. I think 2013 or something like that. But now they reduced it to just under 12 cents. So it's about a 12% reduction, which is fairly steep. And the news article doesn't really say much on the reasoning behind it, but I think I have a pretty good idea. It's not rocket science, right? So it just says the adjusted distribution will benefit, this is the official press release, will benefit stockholders as it closely aligns with the fund's it aligns the fund's distribution with the fund's expected total return. So basically they're saying we're reducing it because the current one is not sustainable. So that's basically it. But the fund's investment objective, the strategy, the process has not changed. So nothing has changed. And so if we go on the Real Assets Income Fund's website here, the Brookfield Real Assets Income Fund, you'll see that, first of all, remember everyone, this is a closed-end fund, right? So there's going to be a market price, there's going to be a stock price, but what really counts is the net asset value, or the NAV price. This is what is the fund actually worth. So as of the 29th, which is yesterday, it's worth, RA is worth, it's like a split fund, right? Closed-end fund, which means the actual stock price could be very different from its value. So it's worth 1467. And as of the 29th, it was trading for 1688, but now it's trading for 1342. So it is technically, I have no doubt that when the new numbers come out, the NAV is not going to change much, because the huge steep reduction, this is people panicking and selling it off, right? So it has nothing to do with the actual net asset value, which technically means that tomorrow you'll see this one trade at a discount, right? It's trading for whatever, and unless of course the price starts going up, which I feel it's going to go up because people usually come to their senses after some time. This is just inexperienced people dumping this fund, I'm pretty sure, and I think it'll go back up with time. That's just my personal opinion, because it's worth 1467, but it's trading for less. So now it's actually trading for a discount. So why did they do this? Well, I have a feeling it has to do with leverage. If you open the fact sheet, remember, this is not a covered call ETF, everyone. What does this fund actually have? It's a fund that mostly has fixed income. By the way, fixed income. So you see that here, the breakdown, right? Corporate credit on real assets. So real estate, infrastructure, natural resources. Those are the 3 sectors that have to do with real assets. It also has a lot of mortgage-backed securities. You see that here. RMBS, CMBS, residential mortgage-backed securities, commercial mortgage-backed securities. So there's a lot in MBS here. Most of this fund is actually fixed income. There's not much stocks in here. You have equities here. You see that there. So what I feel that they actually did it, why they reduced it, and they had to do it, was because of this leverage. So I'm pretty sure, if I remember correctly, last time I checked this, which I don't know how long ago it was, maybe a few months ago, the leverage on this fund was about in the mid 20s, early 30s. So it was much higher than 16.35. So obviously, I guess with the interest rates, they had to deleverage the fund, paying too much in interest maybe, and now the leverage has gone down almost in half from what I remembered it, which means there's less leverage and there's less income to be had, because they can't buy as much of whatever assets are in the fund. So what am I going to be doing? I'm definitely not going to be selling it right now. Selling it now, panic selling it now at 1343 when the NAV is actually higher. You're selling it when it's at a discount. Makes absolutely no sense to me, guys. Keep in mind that just because the distribution reduced doesn't mean it just means the fund is going to be giving out less of its net asset value out in income. So listen, the fund manager is responsible here. They probably could have still given out that distribution, the original distribution, but they said let's be a bit more cautious, so they reduced it. I agree with the decision. I'd rather have a more sustainable distribution than the fund just going into oblivion. So my opinion, everyone here, the dumbest thing you could do right now is actually panic selling, which obviously a lot of people are doing. I don't understand that. Why take a loss? This is a fund that holds, pretty boring real asset stuff, fixed income mostly. Yes, it does use a lot of leverage, but it actually deleveraged a lot. I'm assuming that is the reason why they had to reduce the distribution. So personally, I have RA, my wife's RSP. It's on drip. I am not going to be selling it, especially now because it's going to be trading at a discount. I would check out the price tomorrow. Keep your eye on this. This is the official fund's website, and you'll probably see, especially if it stays like this, that the NAV is going to be higher than the stock price, which means if you're buying it now or you're dripping it now lower than the NAV price, you're actually getting it at a discount. You're compounding your unit. So I'm going to be holding it. It's going to stay on drip. That's what I'm doing personally. Remember, this is not a covered call ETF. It's a bit different. It's a leveraged closed-end fund that doesn't do covered calls, that invests mostly in fixed income stuff, a lot of mortgage-backed securities, things that get really put under pressure with interest rates rising as well. But I think that this one will recover, and it'll be easier to recover now that they have less dividends, right? You give out less in income when the assets inside goes up, it'll be easier to recover. So I think it will recover as soon as the interest rates start getting cut. That's just my personal opinion. So I mean, I'm definitely going to hold on to it. I figure I'd just do a quick video because I know I'll get a lot of questions and comments and all kinds of nonsense about this. And I'm right. I mean, the articles are already coming out. All the Motley Fool and Seeking Alpha articles are all going to come out. And this is something that you should ignore and just look at really what's going on. Look, real assets, but fake yield. Just a bunch of nonsense on these websites. So listen, the most important thing is always going to be the net asset value for closed-end funds, not the stock price. The stock price is just what people's opinions are. The net asset value is really what it's worth. So keep an eye on that, and you'll probably see tomorrow or when they update it, it's going to be trading at a discount. I am personally not selling it now. If you want to sell it, maybe the dividend is lower. I would suggest holding on and waiting and be patient, not doing anything out of panic, because now the yield actually on the current stock price now is about 10%. So it basically, and by the way, the September one is unchanged, so it's only starting in October. So you do 11 cents or almost the 12 cents here times 12, you'll get the annual, and then just divided by the stock price, you'll see it's about 10% yield. So that's it, everyone. I just wanted to make a quick video. Nothing to panic about. Stay cool, stay calm, collected. This is just what happens when there's amateurs. They just see some news, they just dump it. Makes no sense to me whatsoever. So I'm personally holding on to it, and that's what I suggest you do. If you want to sell it, I have the intention of maybe selling it later on. Definitely do it later on, not now, because now is the worst time to sell it. Just like DFN would be the worst time to sell it now, or DGS the worst time to sell. These are closed-end funds, they're leveraged, they go up and down quickly, and they disconnect, remember, from their actual value. This is all that matters. So hope this was informative. See you next time.